Dave Okenquist back with Adam Odell, who presented earlier today. Always great to talk to you. Thanks for taking a little time out here to talk to us and to me, to everybody watching at home.
Thank you, Dave.
One thing I noticed in your presentation, something I wanted to hit on, you talk about the idea of this is not your father's stock market, right? That period between the 80s and 90s where it was quite easy to get good gains. Now we're not really in that period anymore. So talk about the importance of having a system when you're investing.
Yeah, absolutely. I mean, the buy and hold strategy is very lumpy, meaning that you have to be very lucky to be born at the right time and to be starting your investing career just ahead of a secular bull market.
Right.
So my dad and my mom were lucky. They were born in 1957, classic baby boomers. They started their professional careers and started investing in 1982, just ahead of a great 18-year run. So for my father, that was an easy way to make money in the stock market. But I was not so fortunate. I started my adult career in 2000,
right?
And so we all know how that went. But really, it doesn't mean that you can't make gains in the markets. It means you have to have a more systematic, short-term, adaptive approach rather than thinking that buy and hold is going to be the solution to everything.
Yeah, absolutely. You can't just put all that money in and just let it soar like it was used to be able to, right?
Absolutely, yeah.
So one thing I've been asking everybody here that I've talked to is hitting on this idea of disruption, which is the theme of our conference. Looking out maybe 5 or 10 years, what do you think is going to be the biggest change in how people invest and what's going on in the stock market?
I think the biggest change is that we're going to have more change more often.
Okay.
So I'm not really a market forecaster type of guy. So the way that I keep up with the market is on a short-term sector analysis, systematic way.
Okay.
One thing that I talked about is that the traditional sectors, consumer discretionary, energy, financials, those very sectors are undergoing a sea change where they're getting disrupted by other sectors. So there's actually a fund company, Global X Funds, that over the past couple of years, they've come up with disruptor ETFs. So whereas the traditional ETF was a consumer discretionary sector, they have an ETF on millennials. They basically invest in companies that the millennials, of things that the millennials buy.
Right.
Same thing with energy. Energy is old school oil and gas, but they have a lithium battery ETF. So these disruptor sectors, these disruptor ETFs are kind of the new wave of technology as things are advancing. And you can use my style of analysis, sector analysis, and short-term systematic trading to get in on the action there without having to predict which one company or two companies are going to be the big winners in the end.
Right, that's what you said. I don't know where the market's going to be, in a year or two. But like I said, the system that you have, even as things do change, you'll be able to still profit from it.
Absolutely. With a short-term focus of like 2 to 3 months, you're always readapting to the market. So you're never locked into one position or anything at one time. So that to me is a safer way to invest. When things are changing so quickly, you have to be able to adapt to them.
Yeah, great stuff as always, Adam. Always great to see you. Thanks for taking the time out. And thank you all for watching. I'll be right back with David Stockman.